And so now we will be diving deeper into the topics related to the technology and pursuing with our panel related to the tokenization and the adoption of the new technology further on. So in order to discuss indeed this topic in a deeper way, I think we'll need to be looking really at the questions of the interoperability between the native securities and the legacy, the traditional world that we have today. We will also be speaking a bit deeper about the issuance methods, but also see whether indeed it does make sense for us to be really, practically speaking, looking at the technology already today, or indeed see whether we will be rather postponing it. Perhaps not, hopefully, right? Crossing the fingers. So I'm inviting on this floor Barnaby Nelson, the CEO of the Value Exchange, and his panelists to join this stage and pursue further the discussions in a practical terms.
Great. All set. Brilliant. Well, look. Well, thank you very much for making the time in the next hour to talk through. I think the practicalities is the key word that I'd use to describe the next session around tokenization. We've heard from Alex's group the case and the why around DLT and tokenization. But what's fantastic about this panel is the amount of practical hands-on experience that the panelists have in making a lot of what we've discussed a practical reality. So we're going to walk through really a few key sections in the next hour. One is basically just a quick recap on kind of what tokenization looks like today in terms of some real-life examples. Two is then the journey of tokenization for issuers, investors, and intermediaries. And then three is essentially tokenization in 2023, do's and don'ts, and where we progress. So as we go through this, it'd be great to get your feedback, your questions, because if I may just quote a few stats to begin with, in our DLT in the real world survey with ISA last year, 75% of you have experimented with tokenization or DLT in some way. So, there's a lot of practical experience in this room, a lot of questions, but the key thing is that as we move into 2023, 2024, 53% of projects are now being run on a commercial viability basis. So we need these things to work, and we need them to be profitable. So what I'm going to ask is just as we go across, starting with Jens, quick introduction, and then also tokenization in a real practical context for you.
Yeah, thank you, Barney, and good morning, everyone. So Jens Hachmeister from Clearstream, and happy to be here today. Honestly, and I don't want to crash your panel right away, to me tokenization always is quote only linked to DLT. So I would rather always think that digitization and the digital representation of securities and assets is much broader than a monotechnology DLT. And this is how we view it a bit at Clearstream and Deutsche Börse when we apply then IT and finally platform solutions to it. But I think a lot of things had been said, which honestly I prepared for in the last panel around end-to-end, the golden source, the token or the digital security as a golden source and the like. So let me give you a bit of a different perspective. Let me talk about 4 C's. So if you put yourself into the shoes of a user of this new to be developed and deployed digital security services infrastructure, you probably want to use 4 C's. The first one is connect. So you want to easily connect to this new infrastructure. And connectivity is not only about a node or a wallet. It is broader. It is a UI, it is APIs, it is traditional elements like Swift, file transfer, etc. So it's a broad range of connectivity, easy to connect. The second C is consume. Yeah? You want, as a user, you want to easily consume data. So data is the kind of new oil of digital security services infrastructure. So finally, you want to consume any type of data, anywhere, anyhow, on any device. 24/7 has been mentioned, etc. The third C is create. So you want to be creative, because if you do not enable creativity with this new digital market infrastructure, so creativity on new products, then probably you haven't jumped far enough, because new infrastructure is not only about efficiency, but it is about growth and creativity at the same time. And the last C is in life cycle, and we have talked about in the previous, that's the 4 Cs. So we have talked about, or in the previous panel, about the golden source, etc. To me, the game changer of all of this really is to turn the security into a smart digital object and model it along its life cycle, which means, in fact, a paradigm shift to all of your infrastructure you're operating today. Because today we have infrastructures which are mini silos, which are operating on asset servicing. So asset servicing all securities, or settling all securities. But we take a different view. So if we model the security along its life cycle, then it is like switching from vertical view to a horizontal view. And this is the tricky thing, which then needs to be embedded into your next generation of infrastructure. And this is what we are trying to do with the infrastructure we are building around at Deutsche Börse and Clearstream.
Brilliant, thank you very much. So Vipin, from your perspective, do you have three equal Cs?
No. So I'm introducing myself. I run the CSD in Mauritius, and I've also implemented systems, trading and settlement systems at a number of African exchanges. So despite whatever has been said in the previous panel, I'd still like to go back to the business case, because it seems that it's being taken for granted, or there's the hope that, this thing is going to transform markets in ways that we don't know yet, but we hope it will certainly be like Uber. So I think it's good to try to look at things from first principles, and along the way, we may try to debunk some myths. Blockchain was designed in 2008, and the objective was to have something that works in an environment where there's no trusted party, no intermediary, censorship resistant, not controlled by anybody after the financial crisis. And that's why you had features like consensus mechanism, immutability, and that did great. And that's why cryptocurrencies became so successful. So the whole thing was about disintermediation. But if you look at how the legal and regulatory framework is evolving, and also the market requirements, it is clear that disintermediation is not happening. You still need licensed service providers to offer the services, to meet anti-money laundering requirements, for investor protection, for legal redress, whatever you want. But it is clear, I think that we can agree that disintermediation is not happening. And you still need to comply with securities legislation, which is an important point. So with this current market structure, do we need DLT with this current market structure? I'm going to sound a bit, like the odd man out, but it's good to have a robust discussion on this. Because what I think is all of these purported, the assumption is there's no disintermediation, and we still have trusted parties. So all these purported benefits that we are talking about, I think can be achieved with existing systems. If they are not being done, it's not a systems issue, it's more a business process issue. So let's try to see some of these benefits. Obviously, the big deal, real-time settlement, atomic settlement, but with pre-funding. But with pre-funding, I can do with my system real-time settlement like yesterday. But obviously, investors don't favor this because of the risk involved, right? So what we are seeing, it is not DLT that is allowing real-time settlement. It is pre-funding that is allowing real-time settlement. This is it, you know. I mean, the day we can do real-time settlement with DLT without pre-funding, that would be an interesting thing, but let's look at it. But currently, I know it's about pre-funding. So that's the first myth. Second myth, golden source, single source of truth. I can do that. I'm doing it. At the CSD level, you register ownership at beneficial owner level. And this is not a systems issue. This is more a business decision. I mean, the global players here know. If you register ownership at beneficial owner level and all participants have access to the same database, same data, they have access, they download the same data, you have a single source that is legally binding, that addresses all reconciliation issues. So you don't need DLT for that. But if you're not doing it today, because there are certain business decisions, that's fine. I think bigger markets are not doing it, but smaller markets, most smaller markets today are on beneficial owner registration level. So that's the second myth. Third myth, when private securities can be an interesting area. But again, I mean, tokenizing private securities will not change their risk-return profile. It will not make them, you know, change the fundamentals of the company. Yes, it may bring liquidity, but what is really required is efficient platforms without the need to comply with the onerous listing requirements, right? Because the main thing for private securities is compliance with the listing requirements. So if you have OTC or automated platforms, and you have CSDs that extend their services to private securities, you can achieve whatever you want to achieve here, right? What else? User experience. Just two more. User experience. I mean, investors in Mauritius on their mobile phone, they can access their securities account, they can trade, they can view all account activity, whatever is happening. So I don't know what more. I mean, and it's easy to open an account, it's easy to access your account on your mobile phone, and just like internet banking. Single platform, okay, is this a business requirement? Should everything be running on a single platform? Maybe, or maybe not. Maybe it can be also a source of operational risk. But as long as everything is running on TCP/IP and you have standard APIs, I don't really see a problem for integration. So all this being said, I think that you look at the benefits, they are not clear-cut. The costs are important, the complexity is important. So for me, at this stage, I don't see a business case. But this doesn't mean that I'm against innovation. I'm all for innovation. But I think that innovation has to be cost-effective. It's not just innovating to be at all costs, to be seen as, it's fashionable, to be talking digital. I mean, digital markets have been digital for ages now, But of course, we have to continue to become more cost-effective. We have to, cost reduction is fundamental, and also expanding asset classes and facilitating access. I'm going to stop here for the time being, and maybe I can...
No, but honestly, I think what's really well, there you go. Round of applause already. And I think that is a great reflection of the fact that it's, there's so much of this conversation that goes straight onto kind of the assuming it's all done and dusted, kind of the business case. But I think many people in the room here have struggled with many of the points that you've just outlined in terms of, am I going to spend money on this? Why? How? And so therefore, that's what we can really hopefully expand on, and it's great to have a grown-up in the room as we talk through this. So, Andreas, from your perspective, you guys, both Ian and Andreas, you've got so much experience of practically seeing this happen. How does tokenization look when we get past and the kind of the challenges?
Thank you, Barney. And where do I take it from here? I don't know. My name is Andreas, and I'm from NASDAQ. I'm heading up our CSD offering. So I'm a software provider, so hopefully I can give our view on how we look at DLT and tokenization from a sort of software provider perspective. I think that tokenization can give us a huge opportunity to actually reimagine how existing market operates, and sometimes maybe inefficient market, how they operate. And typically you can look at this through two different lenses, right? So either you tokenize new asset types, or you tokenize existing asset classes. And the drivers are, of course, different. Either you want to expand your business by tokenizing and adding new asset classes to your service offering as a CSD, or if you look at tokenizing existing asset classes, it's primarily then to see and improve inefficient processes that you have in your existing systems. So this is what have been keeping me awake the last 2-3 years, maybe, is how do I, as a provider of, let's call it traditional CSD technology, how do I also enable my CSD clients to grow their business, to innovate, to experiment in parallel with running their existing service? And I think Jennifer mentioned, and it has been mentioned many times as well, the important word here is coexistence. So what we are trying to do now is that what we are doing is actually to integrate our traditional CSD platform with a digital asset service platform, enabling CSDs to start looking at, for example, the issuance process to see how we can make the issuance process more efficient, but also leverage the existing connectivity, one of the first Cs, right, of the traditional platform. You can also leverage the account structure and the services of the existing platform. I like to think that our corporate action engine is a very sophisticated corporate action engine, so why couldn't we use that also for digital assets, right? So do some what we call cross-servicing. So you issue tokens, you bring them sort of into your traditional technology, utilizing some parts of the traditional technology that works efficiently and well. I think I'll stop there. Thanks.
Fantastic, thanks. Ian, from your perspective.
Thank you. So my name is Ian Salmon, and I work in the capital markets, predominantly the FMI part of R3. For those of you that aren't familiar with R3, we're one of the DLT platforms that's used by, actually on the previous panel, a number of those entities, and it's, I have to say, not all DLT technologies are equal. So, you know, we have to bear in mind that actually there are very different concepts and very different provision of services across different DLT type infrastructures. We seem to be talking about one thing or one topic as one sort of nebulous thing, and that's not the right way to look at it. So to answer your sort of first question, so over the last 12 months or so, in the context of the EU's DLT pilot regime, we've been privileged to have engaged at a pretty senior level with FMIs, whether that be exchanges, MTFs, or CSDs, in pretty much 80% of the EU member states. That's a pretty good reflection, actually, of getting management time, management visibility, the optic on DLT as an innovative technology and its potential adoption. Of those 80%, over half, about 55%, are actively engaged in evaluating a live DLT strategy of some sort. So we've gone from a period of many POCs, of individual issuances and test platforms, to something which is being used and adopted quite widely. And so to bring the sort of reality to this conversation, I'd just like to focus. I'm going to focus on 3 points. I don't have 3 C's. I've got an S, a C, and a C. So I'm getting there. So settlement acceleration is obviously the one of the use cases which is enabled by DLT technology. Doesn't have to be atomic settlement. Doesn't have to be T0. We look at what DTCC are looking at doing. It's T+1. VIPIN, I can absolutely agree with you, and we'll come on, I hope, to look at the valuable attributes of DLT and why those attributes combined create something unique, but you're quite right, and it's very difficult to argue against people that have put infrastructure in place that can address one or many of the different use cases that are discussed around DLT. And settlement acceleration is one of them. When you combine that with the provision of tokenized cash on ledger, which is the absolute essential point here, then that does become much more of a reality. New asset types are second. So it starts with N, but I'm going to say carbon. Carbon is my C, but there are a number of other fractionalized assets, NFTs, private or pre-IPO markets. So another stat for you. So there's been more than 1.5 billion euros in live private issuances by the banks over the last 18 months. So this technology is being used in reality, in production, and is disruptive. But it's happening at the moment in unregulated markets because the regulation isn't in place in order to allow that to happen. And this is where we see the start of the shift with the pilot regime towards enabling that to happen. The third C, fortunately, is collateral efficiency. So to talk to that point, the banks are tokenizing many assets, particularly in the swaps and repo area, off of the regulated markets in order to maximize the efficiency of their collateral management. And that's another really key point, and HQLAX and a number of other entities are good examples of that. And I just wanted to pick up on a point that Jens made about data. So, and this is slightly to counter Vipin's, one of Vipin's points as well. We live in a world where the digitization of functions, of all aspects of the life we lead will combine to give us an enormous amount of data. And if we're not structured and we're not highly organized around how we manage that data, and this is where the immutability and the cryptographic signature of the different transactions bring this together, then we will not just replicate the enormous job of reconciliation that there is within our industry, but we're going to compound that hugely, and that's a really important point when we come on to talk about the qualities of DLT.
Brilliant. So look, so thank you for all. I mean, everyone's got their cards on the table now. We know where everyone's coming from. So I think for me, what's really important, and I think to echo a lot of what's been said, is that it's, there are different value statements and different journeys depending on where you are in the chain. You've got issuers, you've got intermediaries, and then you've got investors, and the narrative is very different for each. Jens, from an issuance perspective, I mean, let's just talk about what is, I understand you've issued 1 or 2 products recently. What does the issuance process look like in terms of actually getting digital securities out the door, and how do you find that? What's the delta, if you like, between a traditional security and what you're doing in D7?
Yeah, happy to, and I would love to comment on some of the statements which were made. Allow me 2 things, and then I come to the issuance. One is let me pick up on data, Ian, because I believe that data and the usage of data going forward will be highly individualized. So the question is, if we as FMIs are an enabler to our clients to make their own data usage and data products, be it predictive, be it analytics, they should mesh their own data, and we should be the enabler to that and not pre-cook everything. I think this is important going forward. At least is one of our beliefs. I mean, you can offer some certain pre-cooked things, but at the same time, you should be able to bring your own data and mesh it and be an enabler here. And on the other hand, I'd like to make one comment, and then I come to issuance. DLT, and Jennifer made the point earlier, DLT is in the box of new technologies. It is one new technology which we'll use in D7, for example, in the mix with others, with cloud, with event-driven products, APIs, microservices, etc. And I think the first question is always, which problem do you want to resolve with the technology? Is it a trust problem? And the idea of disintermediation. There's one element of DLT. Do you want to resolve a mutualization problem of data, which you can resolve as well with a connect to a database? Or do you want to tap into new assets which are digitized, which are natively digital, etc., and therefore you need a certain connectivity. This is why we believe, when we talk about our D7 infrastructure now, trying to enter the issuance piece, we believe that you should, in your infrastructure as a CSD, you should have one unique place in the infrastructure where you digitize. So our digitizer finally will turn whatever security or in future digital alternative asset or crypto comes along into a smart digital object, but only after, and managing the entire life cycle, and only afterwards is connecting to A, traditional infrastructure, legacy, or B, to DLT protocols, private, public, etc. Because finally, depending on the use case, you might decide that you want to still digitize and model the entire life cycle, but for settlement, for example, you use traditional rails, or you connect to traditional payment solutions like T2S, like T2, like TIPS, like RTGS, whatever, because they still will be around. And on the other hand, you might end up with a digital security on a DLT with a direct placement, cash on ledger in future and whatnot. Now, how does issuance really work in D7? And let me pick the example of structured products. So in that case, the issuers directly have the kind of forms where they fill in the static data of the digital securities. They upload the terms, which are then PDF'd and hashed and directly offloaded in our digitizer. And then for each and every product, a certain set of smart contracts is created to model the life cycle. So to model the issuance as such, but as well to model redemption and potential kind of knockouts if we talk about warrants, etc., etc. And once it is stored, in this case in a central register, then the journey begins for the different digital securities. And once certain triggers are reached, then like a date or a certain index, then either the usual redemption is triggered, for example, or knockout is triggered automatically. This is how it really works. And why could we convince the issuers of structured products to adopt to our platform? Because they have a measurable advantage. And the advantage is that the time from creating the product until it is issued and finally listed on an exchange is going down from 3 days to a couple of minutes, which means for them, in their product design, they are much more mark-to-market. Today, they have to decide 3 days in advance what is the strike price of their next warrant on Porsche as a security. They do not know where the market is. If Porsche has an IPO and they IPO at 82, they have to decide 3 days in advance what the strike price of their warrant series is. But today, they can decide 30 minutes after the first price of Porsche is on etc. They can decide how the next series of warrants will look like, and with pressing the button, they'll have their mark-to-market product out in the market, tradable. And this is the measurable benefit they get, and this is why early adopters will have a market and a competitive advantage compared to all the others who still think, do I connect to a digital infrastructure or do I better still sit on the fence? And this is what's going to happen. We'll create competitive advantages for early adopters.
And just if I may, Vipin, I can tell you already, but one question if I may, the settlement of those securities and everything still happens using T2S and other
absolutely.
World infrastructure, which
absolutely.
is quite key, I think. Vipin.
Just a quick word on data. I think that's a very good point. CSDs have an enormous amount of data, and currently we are not exploiting this commercially, like exchanges are doing. So I think definitely we need to do more as far as data analytics is concerned, and how to package the data and how to sell the data, to whom we should sell the data. But yes, we don't need DLT for that. What we need is powerful data science, powerful data analytics tool.
Brilliant. And so, so this idea is essentially of DLT inside, if you like, in as much as you have a T2S, you have everything, but ultimately, as you said, you're getting the benefits of it. I mean, you know, one of the challenges, I think, with tokenization from an issuance perspective is, Andreas, where you have this coexistence of tokens, you know, you're issuing a whole bunch of tokenized securities alongside traditional securities. How do you find people managing the reconciliation, not just the reconciliation, the balance of the two from an operational perspective? Because it's a headache, isn't it, to keep both running at the same time?
I wouldn't say so, because of our setup, or the way we are working right now with clients is that we are starting very simple, and I think that will be one of my recommendations at the end as well. Mm-hmm. Start very simple, start with one single node. Actually, you don't even have to go on DLT, you can actually start on a database, right? So what we are looking at right now in terms of issuance is the actual issuance process, that is becoming more efficient using DLT. Once we have the issued in place, then everything is represented in the traditional CSD. So what we are actually doing then, we have to reconcile between the traditional part and the DLT part, of course. But then you have all the traditional reconciliation mechanism and everything. In pretty much the tokenized securities act and work very much as a traditional security in the CSD solution. So the main purpose of that is actually to get the CSDs, to get the DLT technology into the overall tech stack without too much of disruption for the participants, etc. And we can actually manage to make one of the most cumbersome processes more efficient while leveraging, as I mentioned before, the benefits of the existing solution. So the reconciliation part is pretty much, it's almost like a CSD link, right? If you do the parallel traditionally. You have one account and then you represent it in another solution, and then there's a reconciliation between two accounts pretty much, and then you have the internal reconciliation in your old system.
Brilliant, and thank you. So I'm going to, in a few minutes, just open up to any questions that people have got as we go along on the first part. But before we do that, Ian, from your perspective, you know, we talk about issuance of the securities, we get them out the door faster, closer to the market, so on and so forth. There's balance sheet savings. You know, by the time it hits the investor, what's the uptick from their side in terms of, you know, the narrative and the value statement that basically is going to get the investor to say, do you know what, this security, this tokenized version of the security must be in my portfolio over and above the traditional version?
So I think from the point of view of the investor, and what we have to realize here is that underlying a lot of existing platforms will be DLT processes. So the concept of every participant in the market having to familiarize themselves with DLT and use a DLT-based platform, well, that's you know, we will see underpinning a lot of pre-existing and interoperable systems DLT. And so for the final investor, I think the biggest impact is going to be the choice. You know, we have to look at this as being the portability of assets and the types of assets that are going to come to the market are increasing. And so the user experience of high yield or finding alpha in assets and adopting those, those benefits will come from new asset types, from maybe we see a lot of initiatives around pre-IPO markets and greater choice, bringing instruments, as Jens says, making the process of modeling structured products or bringing new instrument types to market, making that simpler will ultimately bring the cost down of issuance. And that will come to bear through the whole value chain, which will hopefully, and this is our challenge, to actually use the technology to bring and offer better services and more broad services to clients. The way that will manifest itself to end investors will probably be through the normal data channels and the normal type of trading applications that they use today. But what they will see is an improvement in the type of quality of the data, of the linking of the data to the instrument. And this is where, you know, thinking back to some of the principles that this conference set out right from the start about ESG, about sustainability, when we look at the types of instruments, being able to trace the lineage and traceability of an asset through a reliable source that's what DLT is all about.
Oh, brilliant, thank you. So I think just my notes so far, other than the 5 C's and the 5 myths, is basically that you can see that we're unpicking. I think the practical reality is that there is no great market transition to tokens. There's no great vast move for many reasons, as you say, Vipin. But you've got the DLT inside model. You've got kind of handling it as almost like, as you said, a CSD link. But ultimately, as you said, it's happening on a very tactical basis in terms of certain asset classes on a business case level. And that, for me, that unpacks very clearly the whole idea that there is just going to be this wave of tokenization that's going to happen across the industry. So before we talk about, we've got a whole host of kind of drill down considerations. Does anyone have any questions that they'd like to ask any of the panel now before we start going into the nuts and bolts? Fifth row back.
Thank you. Anna Giraldo, Chief Risk Officer at Thomas Mori. I have a question for Andreas as technology provider. You talked about coexistence of old technology and new technology. Just wondering if there will be a time where the new technology, let's say DLT, would completely replace the old technology, or some services or functions of the CSD are just better suited in the old technology and some others are better suited on the new technology? Or can DLT basically do everything? What are your views? Or maybe anybody else in the panel can share.
Thank you, Anna. I think in the long term, I think new technology will replace what exists today. But no, I think we are talking 10 to 15 years. So what I think the combined model, what it brings today, and what we are trying to enable for the CSDs is actually to gradually move into the new technology. So by doing the integration between traditional technology and new technology, maybe we start with, for example, my example with the corporate action engine, for example. Let's maybe have the tokenized instruments being processed by the corporate action engine for the time being, because that's what we know and the participants know it and everything. But then gradually we can experiment with smart contracts to see, can we do the corporate action processing more efficient by smart contracts? So gradually, eventually, it will be replaced, I would assume, with smart contracts, absolutely. So it's a gradual journey, but it will probably take 10 to 15 years. That's my quick response to that one. Yeah.
If you allow me to add, I mean, I think there are a couple of considerations, I think, which are important for each and everyone who is in the FMI business. I do not believe that we see this kind of mono technology and DLT ruling the world. Again, it is a mix of technology, and it is a journey where you have different building blocks which you replace slowly and steadily. I often like to use the analogy with the music industry. So if we say that the digital security is the MP3 of what is the MP3 for the music industry, then the digital security is our MP3. And if you go back in the music industry, when you had your hi-fi racks and whatever, you were buying a CD player, even though you had your records player still, and even though you had your tape deck. And then the next thing was that all of a sudden you realized, oh, I probably do not need the records, but then the iPod came out, until we ended up in streaming on Spotify. And sometimes I feel that we are now at the kind of 56K modem stadium in DLT, and we are talking about streaming Netflix and Spotify. But the question is, and the point is, if you do not participate in this journey, it will be hard to leapfrog, to say, do I jump now, or shall I wait, You probably need to be part of this journey and kind of stagger your way along these different stages of moving the markets into a digital stage. It's critically important, and this is exactly what we are doing. So we are starting somewhere and working our way through these kind of applying this new technology to more and more parts of the value chain.
Just a quick one. I mean, adoption definitely will happen if issuers, investors, market participants, they see the benefits are real, it's cost effective, it's not just hype, it will happen. But you have to see why it hasn't happened until now. Because this technology is not new. Okay, 15 years ago, it started. Then in capital markets, I would say at least 10 years. We know about the ASX project. We can learn lessons from that. So I don't think we can say right now with certainty that it will happen. It may happen, but if you look at the facts, how they are now, it is definitely not a given.
Yeah, I'd be curious. I mean, for me, I suppose my instant reaction to that, if I may, and it's a deep answer to a short question, but you know, for me, the key point is it. You know, is that ultimately, I think, if you bring everyone's points together, there is a solution that can be applied to many problems in a profitable and certain way, but there is no wave that basically is going to kind of conquer all. It's basically, I think the last panel used it. It's a part of the toolkit, ultimately. Any other questions before we carry on? No? Okay. So look, on the challenges that we're going to or that we are facing, you know, DLT tokenization is a present tense for many of you guys. This question of legacy connectivity across the system, we kind of touched on it, Andreas, but I'm curious, Jens, from your angle, you know, how does the whole coming together of the two worlds work? I mean, you run on an old world treasury system, you world on, I mean, not calling it old, but you have legacy technology that is interacting every day, and this is cited as being one of the biggest challenges to using this technology.
Yeah, I would like to pivot the view a bit, because to us, if you talk about digital securities infrastructure, it is an infrastructure and a network of different connectivities where I only want to connect each and every part of this infrastructure once. So this infrastructure, which is more of a network or ecosystem type of view, I only want to connect once to our LUX CSD. I only want to connect once to Clearstream Banking Frankfurt, once to CBL, once to a listing venue like Luxembourg Stock Exchange or Deutsche Börse. And once you have this kind of one digitizer in a center, you have the nerve system of an event-driven architecture, and you have a connectivity to existing settlement and cash rails, as well as listing venues, even regulators in future for reporting, etc. Then you've really stepped up, and then there is not the question whether it is legacy or not, because then legacy is in the mix. So we'll see, in my view, a hybrid digital security services infrastructure by definition, which then, where you see probably new elements and building blocks added to the mix, and probably others disappearing over time. This is how we look at it, and I think the smart way is to come up with an architecture which really connects once, because finally, if you have a trigger, be it a date or whatnot, for auto asset servicing, for auto redemption, you only want to execute this once and then send the trigger to all the relevant parts of your ecosystem going forward. This is how we look at architecture.
And so part of that whole connectivity question, Ian, is this question of nodes. You know, if you go everything from an FTP, nice CSV file being plopped on an FTP site, all the way up to a node, you know, most of the time in my experience, you talk to a bank about a node and their eyes just light up, not in a good way. What's your experience in terms of the connectivity spectrum, if you like, of how we make this work today, and where's it going?
So it's interesting. So there are a couple of angles here, or a couple of perspectives here. So from a pure technology point of view, nodes are a data capture point that can be owned, it can be hosted, you know, it can be run by a bank on its own, and it's a data source. Okay, and it contains the logic and the assets and everything that they own, and it can be a valuable point of the golden source of data. It can also interoperate very well with the outside world, so we would expect to see workflows being driven by interacting through APIs with nodes and normal applications. So we're just going around our EU pilot regime partners now, showing them our early pilot of the platform we're building, and actually it looks no different to any other issuance and settlement platform, right? It's built in HTML. It looks like a normal trading platform. So the myth or the sort of froth around the whole point of this infrastructure is that it sits within pre-existing infrastructure. So to Anna's point earlier, I don't see DLT as being something that replaces everything, everywhere. It's not suitable for everything, everywhere, and no technology is. But it does interact nicely with what we see today. There are three different models, I think, when we look at adoption of digital assets and issuance. And they play nicely to the theme which we've been hearing on the panel here, which is about stepping stones or gradual implementation. So the hybrid model is probably the second model. The first is the DLT inside. So how do I interoperate? How do I leverage DLT? How can I bring assets that potentially have been issued on even another blockchain to the one I run? So we're Corda, our R3 is Corda. We interoperate with Ethereum. We can list an ERC token. We can bring that into our network. We can immobilize it. We can make it available for issuance for trading. And so there is that first step, which is how do I get myself on the journey? Then the hybrid model. How do I necessarily bring assets that I've already got issued onto this network and make them interoperable, potentially fungible? It's tough. Doing it in an entire issuance is easier than doing it in a part issuance, because the minute that you start to go from T2 for a traditional asset to T0 for a digital asset, unless you very clearly identify the two, then you're going to often get into asymmetries around the settlement. And that plays through right to corporate actions and other asset servicing issues. And then, but that hybrid model introduces more efficiencies. So it starts to bring the ability to see tokenized assets on the same infrastructure and compare them and to use their value interoperably, which is really where the nirvana here is of digital assets. And then finally, complete tokenization, which of course then pulls on all the great stuff around the actual the contract, the programmability of the asset. And that's where you start to get the full value.
And so one other question that in terms of struggles and challenges, and this is kind of open, perhaps maybe start with Jens, but we're talking mainly about operations here. Mainly operational benefits, other than, as you said, the faster issuance and being closer to the market. But what about treasury? You mentioned collateral as one of your kind of core pillars. The balance sheet benefits of what we're talking about here kind of kick in. We haven't really touched on those very much in terms of actually what we're realizing here and now. You see announcements about, intraday repos being able to really kick in. What are we seeing in terms of, first of all, from a challenger's perspective, a treasury in the room on these conversations? And second of all is kind of, what are the benefits that we're realizing off the back end of some of the work that's going on with HQLAX, DLR, and D7 and so on and so forth?
I mean, Ian mentioned HQLAX, and I think in our view, collateral management and collateral and the idea to digitize or tokenize collateral is one of the key drivers, and it is about finally collateral mobilization and to reduce over-collateralization and thereby kind of reduce burden on balance sheets. But I think often the discussions around the solutions driven by new technologies are either stuck in the technology and operations departments or with certain desks, but only rarely reach the levels of CFOs or treasurers. But if, for example, two examples. One is if a treasurer realizes that all of a sudden he gets faster access to liquidity by using, I would say, digital market infrastructure and kind of going direct in terms of direct issuance, direct distribution, etc. So faster access to liquidity. And second, probably kind of by using things like collateral mobilization and digitization, offloading and freeing up parts of your balance sheet, that this is a kind of good steering mechanism at the top of the house, then probably there is another pressure and trigger to move and to adapt to solutions like, for example, HQLAX. But I think it has not reached this user groups. Let me put it like this.
Right. Vipin, what's your reaction to that? I mean, from the grown up in the room perspective, you know, the treasury benefits of what we're talking about here in terms of collateral usage, collateral mobilization. I mean, is that something that's front of mind when you speak to, you know, your participants, when you speak to, you know, you're right in the middle of the industry? Is this a theme that comes up a lot for you?
Yes. I mean, margining, definitely if you can reduce margin requirements, it has an impact on the balance sheet of participants, even of the CSD. But that is being done, I mean, that's the objective of the T+1, for example, in the US. But if you want to pre-fund, then yes, you can do it now. You can pre-fund and then we don't need any margin. But the other thing, something interesting I heard this morning with the US commissioner, the ability to use collateral in different, for different instruments, you know, a pool, you can use the same collateral in derivatives market, in spot markets. And so I think there's a lot of work that can be done there. Not necessarily a DLT-based solution. I'm sure with the current system, there's work that is being done and that can be improved in terms of using the collateral pool in a more cost-effective manner across instruments.
Okay, great. So look, so if you draw that together, what we wanted to do was just draw together some of the big blocking issues that people face in the journey through. So legacy technology, connectivity, and then, you know, this whole question of basically Treasury not being in the room. I think the last one I just want to ask as an open question before we go on to kind of key steps is, you know, the word paradigm shift gets used an awful lot in this context. And I looked it up actually this morning because it was used 3 times in the last so far. It's a fundamental change in approach or underlying assumptions. Now, if you go to your risk manager or your compliance guy and say, I'm coming to you with a fundamental shift in my assumptions of how we run our business, and I need your approval to move ahead on it tomorrow, what's the reaction? How do we get past the whole involvement of risk and compliance as key facilitators in this journey? Because this is very real, and it's a kind of core obstacle. So I don't know, Ian, if you've got a view on that?
Yeah, I think there's an education process here, which I think as we all learn more about use cases, and you know, this is why banks and exchanges and others have been POCing and testing this technology for some time because they're trying to get their head around it, right? And so there's a process of education, and I don't think they're, you know, as we move forward, I think that the incremental process will prevail. So if I go to my risk manager today and I say, trust me, I can just do this stuff intraday and it's fine, then they're not going to believe me, right? But if you can explain, you know, these combinations of the cryptography, the immutability, the process, then this is about actually, it's not so much about the underlying technologies, it's about process change. And just to pick up on the point that you made, you know, the T+1 is compressing everything. So actually, when you look at the pressure on the banks with their balance sheets, actually, it's not surprising that what we're seeing is a vast uptick in tokenization among the banks in order to be able to effectively mobilize collateral between themselves. And somebody somewhere must have understood the fact that that can be trusted because it's happening today.
Yeah, absolutely. Yeah, but I think, I mean, this incremental theme of kind of try it, move forward a little bit, try it, move forward a little bit more, I mean, it's a very consistent theme that we're talking about here, and it's very oppositional with the whole idea that there is going to be this wave of tokenization that sweeps through the entire market overnight. And not surprisingly, that leads us on to the last point, which is must-dos, must-don'ts. So in the fullness of time, we've got a few minutes left. If we can just go, starting with Jensen, through top 3, must-dos, must-don'ts. If anyone in the room is kind of considering this, they've, you know,
okay. First thing is, I would say, define your role. Meaning, using my music analogy, do you want to be a Spotify operator? Do you want to stream music and manage your playlist, or do you want to be a DJ and create digital songs in future? And according to your role, define how you want to earn money in future and what you need for that. Do you just need to connect? Do you need to build up your own infrastructure, etc., etc.? Second thing, I would say stagger and slice and dice, meaning take a stepwise approach, slice it, and really build and to a certain extent prove and then continue. It is really about iterating your infrastructure. And probably the last thing is, don't be afraid of shared infrastructures, to use shared infrastructures. Yeah, because this next generation of digital market infrastructure will be much more of elements which especially FMIs will not be entirely in control, like data in the cloud, like ecosystems where digital transactions might be processed on DLT, etc. So be aware that your next generation of business model will not be about 100% controlling each and every bits and piece of your infrastructure.
Brilliant, thank you.
Yeah, for me, first is get the business case right. Secondly, what is the business requirement that we are addressing? And third, I like this idea of shared infrastructure. If you want to experiment, do it in the most cost-effective manner, ideally with shared infrastructure.
Yeah, Andrews.
Yeah, I think the first one is actually find exactly what you want to do. Find a business process that is broken, or find an asset class that you want to introduce to your service offering. Don't start using DLT for complex processes. Start small, start simple. And finally, start using single node.
Just very, very quickly, what percentage would you reckon of the projects that you're running are single node versus multi-node, if you had to pick a number?
It's very high. Yeah.
Thank you. Ian.
So there'll be some overlap on the last one, but so identify and prioritize what you want to do, and it's not a silver bullet. It's not suitable to do some things, and it's very suitable to other things. Clear KPIs. Every project has a bunch of requirements. Ensure that what you're trying to achieve is achievable, and then yes, there'll be some wriggles along the way, but those ultimately those KPIs need to be achievable by the technology. But I think the most important one for me, which hasn't kind of come across or come over yet, is communication. Communication with your participants, your ecosystem, because it is an ecosystem. And actually, you're only going to ever be part of that and replacing part of that. And so the communication element of it, DTCC are doing a fantastic job of that with T+1. I see everything in my inbox every day around their explainer videos and all this. That's the way to go, is to explain very clearly what you're doing and how people can interoperate, how people can join, how people can become comforted by the fact this is the right thing for them.
Great. So look, so just to draw all of that together, for me the key thing is, as I said, hopefully there is a greater granularity of perspective coming out of this last hour in terms of, the core applications of this and the core issues that most people are likely to have faced or will face in the journey there. But, I think those steps that you just run through make so much sense in terms of just iterative, I was just thinking whether I've got 3 C's coming up, but iterative, very collaborative, and and to your point, it doesn't need to be DLT to begin with. It doesn't need to be multi-node. You're not transitioning an entire market. It's just fixing problems. So thank you very, very much. I don't know if we've got time for questions, but probably best if you grab any of these guys as we're over lunch, because I would just close by saying, as I opened, there are DLT projects, tokenization projects being funded and run every day. So there's a vast amount of experience here to draw on. So please carry on the conversation, and thank you for your time.